Hi, Mark Gordon, GoldenTicker.com, Friday afternoon, September 30th, 2011. And looking here now at the NASDAQ 100, the QQQs, very tech-heavy index, large growth stocks here, a great barometer for growth leadership in the markets. I drew a line along the tops here. We had tested that 3 times. It was an upward moving channel, and also a lower channel was in place here as well. We have broken through that. Last week we pulled back down here to $52.75. Today we broke through that. We had a low of $52.46. We were down 2.58% today on a heavy volume, although less than yesterday, closing down towards the lows. So not a good sign. Now, what's also significant is that in this rally attempt earlier this week, we topped out at 56.20, well below this 57.35 mark here, and have now pulled back and taken out that previous low here. So actually the next resistance will come down here at the round number of $50. So breaking through the lower part of this trend line, not a good sign. And of the market indexes, the QQQs actually have the best looking chart, or had the best looking chart. Here is the S&P 500, the spiders, and you can see that it's was not in that uptrend like the Qs, just kind of waffling back and forth here. Now, what's significant here is that last week we took out the 113.46 here, made a new low down here at 111.30. Rallied back up, came up short of the 121.99, and then fell back down. We still have not taken out this low that we made last week, but did not come up and take this one out and send us to a new uptrend. Still below this blue line, the 50-day moving average. So the spiders, which are large cap companies, not looking good. And looking at the Dow, down 2.16% today. Again, took out the previous lows last week, rallied up this week, came up short, still below the 50-day moving average, and now falling down. So all the leading indexes not looking strong. Now going overseas, this is the emerging markets index fund, and came up short this week, real short. The 50-day moving average is way up here at around $41, and we're down here in the $35 land here. Today, a bad day, above average volume on a pickup in volume at the lows of the day. Well below the 21-day moving average and this gray line here, which is the 10-day moving average, which it found resistance last week. So came up way short. This one is just plunging. And a similar chart pattern for the small caps. This is the IWM, Russell 2000, small cap index. Traded fund, and came up short again, well below the 50-day moving average, and plunging down towards the lows of the day, down 3.06%. Volume was a bit lighter though, but still ugly looking chart, back down here at the lows of this sloppy pattern here. And with the stock markets all looking weak, we're turning now to gold. This is the GLD, the exchange traded fund for gold. Had a quiet week basically. We're down here at this green dotted line, which is the 100-day moving average, fighting a battle here, kind of going back and forth. Volume is tapering off, so there is some consolidation going on here, now moving sideways. Now I'm going to go ahead and project onwards. We're forming kind of a flag formation. If you draw some lines along the tops and the bottoms, you'll see a bit of a flag or a pendant. It looks like it's getting tighter and tighter. This is going to resolve itself and establish some sort of a direction. I don't know which way it'll go. This is an ugly chart, obviously, so it's best to keep an eye on that. If it breaks to the upside, which I hope it does, the next stop will be this 10-day moving average, which is falling very rapidly. It would be about 5 points higher from here. And then the next stop up here would be the 50-day moving average, this blue line, which is now flattened out at about the $170 range here. So gold moving sideways and consolidating, and let's see what happens. And here's a chart of the SLV. This is the silver exchange traded fund, and it was down 3.5% today. Silver very, very volatile. You can see it falling completely out of bed here, taking out all the moving averages 2 weeks ago. just in free fall here, big gaps down, just mind-blowing. Found a low here at 27.41. Now, again, projecting out, you can see this sort of flag. This is a very steep flag formation coming in here. Going to resolve itself too. We got volume dropping off, consolidating right around the $30 range here, but very volatile trading. Let's see what happens here next week. And here is the XLE. These are energy stocks, and again, consolidating here around the $60 range. Very volatile here. And today we had above average volume, closing towards the lows of the days. Not a good sign here. Trying to establish some sort of a price base down around the $60 range. Let's see what happens here. But this one really has had a rough couple of months here, topping out almost at $80 here. Now we're back down at around $59, $60. So tough correction, down below all moving averages. No place to trade here. So I think the charts are telling us that we're trying to find some bottoms here after some nasty falls. Stocks in general are all the charts are looking really weak. Gold and silver trying to consolidate. Energy trying to consolidate, but a very sloppy chart. So best to wait this out and see what happens. And in the words of the great trader Jesse Livermore, he said, patience is sustained courage. So sometimes the hardest thing to do is to do nothing at all and wait on the sidelines until the charts start pointing in the right direction. Good luck, everyone.